Is the housing market getting worse? Today, I'm going to touch on the good, the bad, and the ugly in the housing market. And stick around to the end because I have a list of the top 6 metro areas for home price increases. Well, the headlines are negative. Of course, we all know mortgage rates are rising, home prices are at record highs, and frankly, the inventory is still super low. And there's just not enough homes to buy. In addition to that, inflation is still really not coming down. And we're also looking at looming recession at this point. So the only thing that will help balance this equation of inflation and looming recession is more inventory in the market. So more new construction homes being built, more inventory of homes coming on the market. Also, that translates into all the commodities. We're short on all commodities. I know you've heard in the news there's a shortage of everything from eggs to ovens. I know recently I ordered a new stove for my kitchen, and that was the last week of December, and I'm still not getting it until the end of March. So there's still a shortage of a lot of things out there in the market. And of course, that's not true of everything. Some things are stabilizing, but what our economy needs is more inventory in general, because it's a supply and demand thing, right? If it's high supply and low demand, prices are going to come down. If it's low supply and high demand, prices are going to stay high. So are we moving into a territory that is going to be better or worse for the housing market specifically? Hey, can you do me a favor? And if you find this video helpful, go ahead and hit the like button, because that helps the YouTube algorithms send the video out to the people in this world who this video would be helpful to. And also, I'd love it if you would subscribe to our channel. Well, okay, so the market we were just in for the past 2.5 years was extremely unhealthy. Even though we had low interest rates, we had very low levels of supply, only 2 weeks or a month, and there were bidding wars, and there were people paying 50 to 100 over asking price, and that's not healthy, and that is not a good market either, even though you had low interest rates. So high interest rates have pushed some buyers out of the market or given some people reason to pause. But what that means for you as a buyer is less competition and less chance of the bidding war. Although I'm seeing a little bit more bidding wars coming up in Orlando, it's still not happening a lot right now. There's really nothing good or healthy about a market where homes are selling within minutes of them coming on the market. Even if they sit 1 or 2 days, that's what it was like back then. And there were people, out the door to see the home and 50 offers coming in. So that's not healthy. So my suggestion to you is that the housing market is trying its best to normalize. It's not there yet, but it's trying to normalize. We're only a few months out from those frenzy days of the pandemic market, and that's largely due to these mortgage rates. But the mortgage rates are helping moderate the market a bit. So people are being able to negotiate on price on the homes. They're sitting on the market a little bit longer, which is a good thing. Again, that's normal. Of course, in the news media, all you hear is negative, 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 and on YouTube, all you hear is negative, negative, negative. And what I'm saying is I'm starting to see the beginnings of a healthy market. We're working with clients in all price ranges. In the last 2 months, we've worked with multiple clients, everywhere from $350,000 to over $1 million, and all prices in between. And we've been able to help them find homes, get them under contract, and get them to the closing table and get it done in a way that was less stressful, because you have a minute, to think. You can go look at a home, and then you can go home and think about it, or maybe compare it and look at a couple other homes before you have to rush and put an offer in. And then there's also room to get seller concessions like closing costs and repair credits. So what's important right now, and my warning to you, I guess the warning here is to understand that right now you have less buying power than you did a year ago. So that's the warning. You need to go ahead and check with your lender and see where you are with what home you could afford if you're looking to buy right now. But if the timing is right for you, then you can get into the market where you can get in, right? So these interest rates are going to be here for a while. We don't really know how long. They might go down towards the end of the year, but then the prices will just jump up high again. So it's one of those things. It's just to balance it out. You have to think what's right for you in this market. So what's important right now is just focus on what your needs are and not what the market is saying. At the end of the day, buying a home is such a personal decision, and you should act when it's right for your lifestyle, your finances and not when the market says to do it or not to do it. If the timing's right for you and the price points are in line with what you can afford, then don't fixate on the interest rate. See what you can afford in your budget and the interest rates that we have on hand. And as far as sellers go, we're seeing plenty of people still looking for homes, but just not enough inventory. Again, even though we have had an increase in inventory, and you can watch Savannah's video, we'll link it up here, where she shows the numbers of inventory that we are seeing in the Orlando market, it's still really low and the selection is not super great. So if you have a home that's nice and it's what we call a cream puff home, it looks great inside and out, curb appeal, all the good stuff, your house will sell, and it will sell quickly in this market, especially if it's priced correctly. And that's a whole other subject matter that we can get into, but it's got to be priced correctly. But that's true in any market. So here is the bonus material that I was promising you. Another article that I wanted to point out was in the Florida Realtors website. Florida has 6 of the top 10 price increase metros. Basically, what the article is saying is that 6 out of the 10 top year-over-year price increase areas were in Florida. So Florida is kind of bucking the trend on prices going down. In certain areas like California and Texas and lots of places where you see in the news that they're having big price drops. Although we've seen, like I said, negotiation on pricing and that sort of thing in Florida as well, but Florida's maintained their prices. Orlando was up 16.9% year over year and 0.6 quarter to quarter. So we're still holding firm on our prices in Florida. The top 6 were Sarasota, Fort Lauderdale, West Palm Beach, Orlando, Cape Coral, and Tampa came in at number 7. So prices are staying pretty stable here, but that's not true everywhere. And the article said that Florida was number 1 for home appreciation. Second was North Carolina, followed by South Carolina, then Hawaii and Maine. The areas showing the lowest annual appreciation were DC, California, Idaho, Oregon, and Washington. I've said it many times on this channel, real estate is hyper local. You may be following a guy in California or Phoenix or Austin, Texas, who says there's these huge price reductions and the market's going down, but that doesn't necessarily translate to the Orlando market. If you're looking to move to Orlando, please download our free buyer's guide. That's a new one. It's in the information box below. And thanks for joining me today. Really appreciate it. Have a great day. Bye-bye.